Hi, this is Ian Coleman from PIA First. This is the video analysis for dollar index and the FX majors for the week 2nd of July 2018. We're going to break down the currency pairs, break down the time frames, highlight what we believe is going on in the currency majors. So we're going to start off with the dollar index. Here we can see from the monthly chart that we're in a very large bullish channel formation. This area, around about 95, the figure, has been quite pivotal since 2015. If we go to the weekly chart, here we believe we're going to form or eventually form a bearish head and shoulders pattern. So this being the left shoulder, this being the head, this being the neckline, and then coming up to form the right shoulder now. Last week's price action, we reversed all the initial gains. We've actually posted a bearish outside candle, so the immediate bias is to the downside. We have got some trendline resistance located around about 95.83. This is the second time that we've sort of approached this trend line. Now we look like we've got pincer tops in place in the dollar index. If we break it down to the daily chart, let's just move this off. We look like we've got a fifth wave extension, so 1, 2, 3, 4, and then up in 5. Obviously strong selling pressure on Friday of last week has left an evening doji star formation, which again is bearish for the dollar index. If we go to the intraday chart, this is the 4-hour chart. Last week we noted this Marabuzo level, which actually lined up with our bespoke support. We now look to be forming a double top formation off those pincers. If we break this level here, again 94.18, then the double top formation is confirmed, and we should see further losses in the dollar index. So reflecting that dollar bias onto the majors, and we're just going to break down the time frames and highlight where our support and resistance levels are. So opposite to the dollar index, we're in a bearish channel formation. All of we've seen little net change really for June, and we've been left with a very indecisive doji style candle. If we go to the weekly chart, here we've got a DMARC 13. Now DMARC 13 sometimes highlights the end of a trend, so we're now looking for the opposite basically of the dollar index, and we're looking for head and shoulders, left shoulder, head, right shoulder, and we're looking for a move up in a corrective formation in euro dollar. If we go to the daily chart, I think it's probably the most important chart. 1, 2, 3, 4, 5 waves to the downside. We've now just stalled at this trend of lower highs, so there is scope for mild selling at the start of the week, but it should be limited. The most important factor on this time frame is trendline resistance from these higher highs, very close to 38.2% pullback level, which is 119.08, and we've got our bespoke resistance at 118.75. So that's the focus this week on the rally. As far as dips are concerned, we just go to this time frame, 1 hour chart. We've got bespoke support at the beginning of the week at 116.21. If we look at this time frame, we can see the potential of a 5-wave pattern here as well. So there is scope for mild selling off that trendline resistance and then buying the dip for what we believe will be a stronger drive to the upside. Sterling dollar, the monthly chart, highlights again an area that's been quite pivotal. We really haven't got reverse trendline support until around about 127.56. If we go to the weekly chart, here we can see that we had a bullish 5-wave pattern to the upside. We've now reversed or corrected lower, I should say, and levels close to the 50% pullback, which is 131.27, have attracted dip buying on 2 occasions. Reverse trend line resistance is now located around about 139.05. if we go to the daily chart, this is the last drive to the downside. We believe we've had a fifth wave extension. I think this is starting to look like an ending wedge pattern on this time frame. So basically a break of resistance, and then the measured move target is up here, which is around about 134.39. The Marabuzo level, which is the midpoint from the open and the close of a very bullish or bearish candle, is located at 131.40 and is prime support going into this week. If we go to a shorter time frame, we highlighted this last week. Again, that's that ending wedge formation. We've got some trendline resistance at 132.29. And we've got our bespoke support at 131.51. So 131.51 is the bespoke support. 131.40 is that Marabuzo support. So we're expecting the combination of those two levels to hold any downside move at the beginning of next week. Dollar Swiss monthly chart is we believe is a ending wedge formation. This area, which is the psychological one, the figure, has been pivotal for really since sort of 2010, in fact. So it was support, then resistance, and again it's becoming resistance at the moment. If we go down to a shorter time frame, the weekly chart, we had a DMARC 13, again, often a sign that the rally is exhausted. We've tried to move to the upside. All of last week's, or the majority of last week's initial gains were sold into. 99.21 is our bespoke resistance at the beginning of the week. And we're expecting further losses. Not as aggressive as the rally in euro dollar. Dollar Swiss and euro dollar are virtually -1 correlated, but because we think euro Swiss will also move to the upside, we don't think the move lower in dollar Swiss will be as aggressive. Dollar yen, I think the most important time frame is this one, which is the 1 hour chart. We look to be forming an ending wedge pattern. The measured move target is 109.68, which is the start of the wedge. We've got trendline support at 110.51 at the beginning of the week, and we've got our bespoke support at 110.40. So we really need to see a drive through there. We might even move lower, bounce, retest, and then move to the downside. Like I said, 109.68 is is the measured move target for dollar yen. 109.45 is our bespoke support. Dollar CAD. Again, we did a video report on this last week. The monthly time frame, we can see a breakout to the upside. 130.61 is reverse trendline support. If we go to the weekly chart, then we've got an inside wedge pattern. We've got a strong bearish candle from last week. So this is a bearish outside week, and normally highlights the top of a trend. So this time frame basically tells us that we should be moving to the downside. If we go to the daily chart, we've got that bearish outside week. We've also got a bearish outside day. We've seen a strong drive for the last 2 days of trading last week. If we go to the 2 hour chart, here we can see got a double top formation. It was confirmed with a break of trendline support. We've then driven through, it had a small bounce and correction. This was actually our bespoke resistance on Friday. And then we've moved to the downside. We've got 261.8% extension at 131.23. However, commodity currencies have a tendency to drive through those support levels and actually move down towards 423.6%, which is down here at 129.60. The reason that we favour this area is because our next bespoke support is located at 129.78. So any sort of minor rallies at the beginning of next week, we will be looking to sell into. Aussie dollar, and I think this is probably the most important time frame going into this week. We could be forming a reverse head and shoulders pattern. Far too early to tell. So basically this would be the left shoulder, this would be the head, and then a move up. And the only reason I'm saying that is because we've got some bespoke resistance here at 74.58. It's close to the previous swing high. So after we reach there, maybe we sort of pull back down. At the moment we've got bespoke support at 73.78, so we're probably going to see some range trading in between these two levels at the beginning of the week. Euro sterling, we broke to the upside, the ascending triangle formation. However, levels close to the 78.6% pullback have found some selling. We've posted a doji style candle on the daily chart. If we go to this chart, and we are long actually at 88, I think it's 88.50. I have to check our levels in euro sterling at the moment on a medium term call. We're going to monitor this very carefully at the beginning of the week. If this looks like the next rally is rejected around about 88.70, then we're probably forming a bearish head and shoulders pattern. So this would be a left shoulder, this would be the head, and then we'd form the right shoulder. So if that is the case, then we're going to be looking at getting out of our long trade, medium term long trade in euro sterling. Euro yen, again a decent drive to the upside on Friday. Our bespoke support is at 128.58, which is very close to the Marubozu level from Friday. Really got to see a breakout of this trend line resistance at 130.12 to then see a higher correction, what we believe will be a correction towards 132.58. We've actually got an ABCD formation target at 132.30. So basically the call next week is to try and buy dips close to the Marubozu for a drive to complete this ABCD correction. Okay, I hope you found that informative, and we'll be back soon with some more video analysis. Thank you.